Hey everyone, this is Ahsan Raza from Century 21 Innovative Realty. Thank you guys for tuning in. Today I've got a very special guest, but before I introduce my guest, just want to give you guys a heads up that this is our first episode. We plan on doing a bunch of these on a regular basis, and I want to hear from you guys, what questions, what topics do you guys want to talk about in the future, and we'll make sure that we get that in our future webinars as well. So without further ado, I want to introduce my guest today, Ms. Fatema Railey.
Nice
expert mortgage broker. Yeah, nice to meet you as well. How are you today?
I'm good. How are you?
I'm doing good. I'm doing good. Just got back from my vacation. So
oh, nice. Where did you go?
I went to Texas, Houston.
That's awesome.
Yeah, it was kind of hot over there. So when I got back, it was like really chilly all of a sudden. I don't know what happened.
Yeah, I know. I don't even know what's going on
Canadian
with the
weather, I guess, right?
Right, exactly.
Yeah. But it's nice to be back. And I know we've been looking forward to doing this for quite some time.
Yes.
Had a couple of cancellations in the past, but we found a great team to help us. And we're finally here. So thanks for coming on. I wanted to kind of give an intro as to how we met, first of all. And I think it was over social media.
Yes.
I had seen one of your posts, and I had shared it probably, right?
Yes,
I think.
you probably
did.
did.
You liked it, and then I had shared a post of mine. You liked my post, back and forth. And you sent me a referral. I sent you a referral. And then we didn't really meet until like probably a couple of months ago in person.
Yeah, that's right.
But we talked over the phone. And that's the power of social media, right? Where you can actually engage people, whether it's customers or even fellow business people.
Exactly. Exactly.
And I'm not saying this to be nice. I think you're probably one of the best brokers I've worked with.
Oh, thank you.
So really
that's
appreciate
very kind.
But that's enough for me talking. I want to find out about you. How did you get started, and what was your motivation to get into the business?
Yeah, for sure. So I guess brief intro. Basically, I've always had a pulse in the real estate industry. On weekends, I'd actually go see open houses like that. That would be like my pastime, right? And then in the last 8 years, we've moved 6 times. My husband and I. Okay. So we've done a lot of moving. This is the first summer in the last 3 years that I'm actually not going to be moving, right? So no packing, right? So it's great. And then my husband started like a mortgage startup, so I was kind of like there, seeing him, be so passionate about it, and then just the passion, that came from that, and I'm like, what, I want to be in this industry. I'm not gonna look back. And then since then I've taken that leap of faith. The work has been challenging, but good challenging, stressful. I can tell you the stories, and it's been humbling and rewarding, and it's been great. And your support has been great.
No, likewise.
So that's where I'm kind of at.
And how are you balancing that with family and other commitments?
Honestly, it's been great. As an agent, there's flexibility, right? We work when people are off work, right? So I can put the kids to bed, I can, have some playtime with them. But then, when they're sleeping, that's when I start my work, because that's when people are hey, you know what, this is what I'm thinking, because that's when they're off work, right? So it's been great, I left the 9 to 5 to do this. And yes, we work 24/7, but it's different because you set your own hours. And there's that flexibility piece as well that comes with it.
That's amazing.
Yeah.
I guess let's kind of talk about more into your job and your nature of your work in terms of what are some of the advantages of using a mortgage broker? Because I know a lot of my clients, when I first approached them, they're like, we're going to go to the bank and we're going to get an approval. And I'm like, well, okay, go to the bank, but also speak to a personalized mortgage broker who can actually work for you and with you.
Right.
So that's one advantage I pointed out right now, but maybe you can dive into what are some of the advantages and benefits.
Yeah, so I think a lot of people have this notion that if you work with a broker, for instance, it's only the people, that, can't get a mortgage through like a typical lender, right? That's not really the reason, right? We're here to help clients, right? We walk them through. So we don't work banker hours, right? We, like I said, we literally work, with the clients, 24/7, right? You need someone in your corner like that, right? Especially last year, like the last year's market, when there was offer night, bidding wars, and all that happening. I had clients messaging me at midnight, putting in deals in the system at midnight, so we could be approved the next day, kind of thing, right? To be like, hey, Fatema, how much more can I put down in order, to be approved for this house? What's my max that I can put for this house, right? You're not. You can't pick up the phone and call the bank and be like, hey, what is it that I can, put down for this house, right? So that's just one of the advantages. Another example, appraisals are a hot topic right now, right? Back in January, I had an appraiser or an appraisal that came short. So just for context, basically, an appraisal is basically the value that an appraiser puts out, for the house that you've purchased. So it needs to be the amount that you've bought the house for or a little bit higher, right? And if it comes lower, right, the client has to make up the difference in terms of down payment, right? So had an appraisal that came short by a big amount, and I went to bat for it. I was like to the appraiser, I'm like, how can you say like the realtor had a reason why they put in, the purchase price, right? There's comps to support it, right? If it was just a regular bank, they would have just said, hey, fork up the difference, know? My goal is to help the client as much as I can and, to walk them from the start to the end, to put their nerves at calm at all times, right? So I think those are just some of the advantages, working with a broker versus a bank. And we have access to multiple lenders, right? With the bank, you go to TD. TD gives you a rate. You're not really happy with it. Then you go to Scotiabank. Every time you go to different lenders, they keep pulling your credit score, right? For us, though, we pull it once and we can shop around your file to different lenders without having it hit your credit all the time, right? So just some advantages
for
that
sure.
we have.
100%. And I think, as you alluded to, we've had those conversations several times, 10 p.m., midnight sometimes, putting in offers. And thankfully, we got them closed with your help. And I think one of the biggest things in our business is communication.
Absolutely.
Right? Because one of the complaints that our industry gets a lot is the lack of communication or lack of follow-up.
Yep.
And one thing that you do great and why I keep referring businesses because of your communication. Even for myself, sometimes I'm talking to my clients, but you will call me and update me on their file, which is amazing because now I'm kind of in the know as to what's going on. Yeah. And now I can speak to my clients and better understand their budget.
Exactly.
So communication, if you're a mortgage broker or realtor just getting started, I think that's probably one of the biggest things that you want to do or improve on.
Yeah.
So thank you for that.
Yeah, no worries.
So now let's talk about the big hot topic, which is interest rates.
This is not what I signed up for. I didn't come here to talk about interest rates. This is why we had you
as a first guest here because you're the expert. Obviously, you know how the mortgage industry works.
Yeah.
But kind of give our audience, I guess in a nutshell, what's happened the last 2 months for interest rates and where are we kind of at right now with rates? What are we expecting in the future?
So I think it's been a tough few months. I'm not going to lie. I think, the first hike that happened was in March, I believe. And then it's just, we've had 3 consecutive, rate hikes. And, it's been tough, with clients that are locked in a variable rate mortgage where you kind of have to calm them, ask them the question, what was the reason, that you chose a variable rate? Aside from the rate being low, what was other factors, no one thought last year that the Bank of Canada was going to raise as aggressively as they have, right? I think the prediction last year was, they had said end of 2022, 2023 is when they were going to start, right? But you've just seen, the Bank of Canada, go crazy. Yeah. And I think they're going to continue, right, to rise and, have the hikes. And the reason for that is that they want to curb inflation, right? We're at 6.8%. Generally, they like to be around the 3 to 4% mark in terms of inflation. So how do they, go about reducing that inflation is, they're like, hey, let's hike up the interest rates, so, people don't have the same borrowing power that they did before. And hopefully, they can kind of, you look at gas, you look at groceries. I remember I was paying $4 for, those 3-pack of bag of milk and now I'm paying $6, right? Everything is just double, right? And it's going to continue happening. I think if you are in the market and you are looking to purchase, I think it's important, to connect with your mortgage agent or the bank, right? Because with the hikes that are happening, your borrowing power is kind of reducing as well, right? So you may have been qualified for a $500,000 mortgage. Now it might be a little bit lower, with the next hike that's probably going to happen in July, on July 13th, right? They're saying that, I'm going to say the hike can be anywhere between 0.25 to 0.75.
Right.
You know, beeps.
That much, yeah.
Yeah, depending really. So, you know, fingers crossed. You know, just don't lose faith. You know, this has happened in the past. I think we were chatting earlier, and I was telling you that back in 2017, 2018, like interest rate were high as well, and people were probably locked into the variable rate mortgage. But then, you know, as soon as 2020 hit, they were laughing because, you know, Bank of Canada reduced, you know, the prime rate, right? So really, you know, hold tight, hang tight, you know. I think you had posted a reel recently on, you know, going back, you know, and looking at your finances, right? You know, where is it, you know, like that you can kind of, you know, cut, offset, you know, to make up the difference in the fluctuations, right? So do you really need that Netflix subscription? Do you really need that Crave subscription? Like, do you need all these subscriptions, right? Because on average, let's say a $700,000 mortgage, for instance, with every hike that happens, you can expect to see about like $100 to $200, you know, increase in your payments, right? So kind of going back and, you know, being really tight with, you know, your disposable income, you know, that you have and putting it elsewhere, you know, just thinking about your financial picture as a whole. Yeah,
and I think it's all perspective, right? Where I think unfortunately what the media does, you know, whether they realize it or not, is it's just constant negative, negative, you know, increase in prices here, increase in prices there, which is what's happening. But I think it's really a mindset thing where me, for example, like I have 2 younger brothers and a sister, and they're a lot younger than I am. So what I've kind of taught them right now is, okay, you know what? First of all, stop listening to what the media says and keep doing what you're doing, right? Like they save 50% of their income, for example.
That's amazing.
Right? And they're younger, but it's like, okay, now let's go back and let's see where we can improve on. You know, we don't have to go out to dinner every 3-4 days, right? And if you save, like, I looked at my budget, I spent the last 2, and I'm not proud of this, but the last 2 months, I probably spent about like $400 per month just on eating out. And I'm like, if I reduce that to $200, I can probably make up my mortgage payment, right? So that's where that video came from. 'Cause I was like, this doesn't make sense, right?
Exactly.
So it's an opportunity for, I think, all of us to go back and reassess our finances. And it's all perspective. You can look at it from a negative point of view or a positive point of view. I think that's a spin that we have to put on. We're not trying to sugarcoat it. We're being honest that if you're positive about it, things can actually be better in this situation.
100%.
I guess kind of following into the next, you know, question that I had for you was, you know, now that people have kind of locked in, they bought homes, a lot of people are having buyer's remorse, right? So what are you kind of seeing? How are you addressing that? And I can also give my perspective on what I'm seeing as well.
So I think the one thing that you kind of have to think about is what was the person's objective? You know, like what was the reason they purchased that house, right? You can never time the market. It's never the right time. You know, even though you hear all that, oh, you know, it's the right time to buy the house. Now it's what was the reason that you bought that property? You know, was it, you know, your first time home buyer? You know, did you want to move into a bigger house? Was it a location that you chose, you know? So if those are your objectives, it's kind of a long-term objective, right? So, you know, be comfortable, you know, let this turbulent time pass through, right? And, you know, stop. The market will always balance out, right? If the house prices are low, the interest rates are high, and vice versa, right? Like we kind of saw that last year, right? Where the house, like interest rates were low, but house prices were so high, right? So think about that long-term objective that you already had. You know, stop checking Zillow, stop checking Realtor.ca. Don't do that, right? Just enjoy your house and, you know, just get comfortable in it.
Yeah, I think the key word you said is enjoy your house, right? I think that enjoyment is kind of lost with a lot of people now. And I always tell my clients that, you know, real estate is a long-term purchase, right? So if you're in it for the long haul, yes, okay, you might have gotten the house for a lot cheaper today. But if you ride these turbulent times and wait 2, 3, 4 years down the road, you know, history will tell you that, you know, real estate always goes up and will balance out. So people need to have that faith. You know, me personally, I've, you know, purchased a family property during the pandemic when prices were crazy, you know, and I was bidding, you know, and me as a realtor, like, you know, people are like, well, you should know the market. I'm like, no, I'm doing what
you should know the market.
Yeah, I have a crystal ball at home, right? But you know, it's situational, right? At the time, like we needed our own space or a bigger space. So it doesn't matter to me if the market is up or down. You know, I need to, you know, go according to what my family needs at the time, right? Now, today in this market, if you've got a new job somewhere, you have to move. Are you going to wait for the market to, keep going down, and then, that job opportunity is it's situational, right?
Absolutely.
It's what's happening in the market. But again, going back to the fact that real estate is long term, I truly believe that because I've got clients who have invested, who've bought, and they've held on through these turbulent times. I've been in the business for about 11 years now.
Oh, wow.
I've spoken to clients who have bought real estate for 20, 30 years, and they've also given the same advice that hold long term, right? If you hold long term, then these turbulent times won't impact you. But if you have the mindset where I'm going to buy and I'm going to flip, or I'm going to buy and wait for that equity to go up,
that's right.
You're never going to enjoy your house. You're never going to enjoy your investment.
Yeah.
And that's the key thing that you mentioned.
Exactly.
Enjoyment is huge. Enjoy your house, enjoy your investments, enjoy your life in general. Be positive, and good things will happen from that.
Yes.
Now, just kind of touching back on some basic fundamentals. For a lot of first-time home buyers who are watching right now, what are some mortgage tips you can provide? And let's talk about fixed and variable right now, right?
Yes.
Just touch up on these little things that people always ask about. What are some advantages, disadvantages?
For sure.
Today's market, obviously, it's even more in depth now. We can talk about
that. So with fixed and variable, I don't think there's ever a cookie cutter answer.
Right.
I think it depends on the client and what their objective is, right? So what I mean by objective is that, do you foresee yourself moving within the first 5 years, right? Okay. So that's a key, factor to consider, right?
Yeah.
So as you know, fixed mortgage rates have a higher penalty, okay,
right.
And variable mortgage usually have like a lower penalty, like a significantly lower penalty.
You mean like
right?
when you decide to sell your home?
Or just decide to break your mortgage, basically, okay? So a stat that's out there is that 60% of first-time home buyers actually don't see their full 5-year term. They actually break before, okay? So, and I'll give you a personal example.
Yeah.
My husband and I bought our first house in Brampton in 2014, okay? We both worked in the West End. We're like, this is perfect, right? Like, life is perfect. Work is like 20 minutes. I'm not commuting. This is amazing, right? 2016, we get pregnant, and we're like, oh man, life change, right? We want to be closer to family. We're locked into a fixed rate mortgage, okay? We can't port our mortgage because we bought a new build for our next house, right? So it turns out we had to pay that hefty penalty. We didn't think, we were younger back then. I would probably, tell myself off, then, but we were younger back then, and, we didn't think, nobody asked us that question. Where do you see yourself in 5 years? We were a young couple. We knew we wanted to have kids, but we didn't really think about that, right? So that's one thing. What is your objective, right? Do you foresee yourself seeing, being in this place for 5 years? Is this just a starter home that, then you think that you're going to break, and you're not going to stay your full, 5-year course, right? Okay. So I think that's one, I would say. The second is, do you have an appetite for the fluctuations in the interest rates, right? So if you're the type of person that you're like, $1,500 per month, that's my mortgage payment and that's it. Fixed payments probably, the answer, right? But if you're like, what, we're in a good spot, we're in a good position, we can probably, afford to, pay an extra $200 every month, based on the fluctuations, right? So I think that's another thing that you kind of need to take into consideration too. My personal bias, and I probably should not be saying this because I can get in trouble for this, but like for my husband and I, right, we love variable rate mortgages, right? Like I said, we've moved 6 times already, right? So it doesn't make sense for us, to do a fixed rate. Exactly, right? Because, we can break, you can refinance, today, yes, the rates are high, but then, who knows, later on, rates, come down, you want to refinance, you want to, build your deck, you want to build your backyard, you can pull money and equity out of your house, right? And, it's easier when you have a variable rate mortgage because your penalty is anywhere between $3,000 to $5,000 versus if it's a fixed mortgage, you're looking anywhere between like $15,000 to $20,000, right? And historically speaking, variable does, tend to be cheaper, right? Even though how we look at it, perspective, portrait, like if you don't have the insight and if you don't talk, to an expert, nobody can really explain that to you, right? But once you sit down and you look at the numbers and, you actually look at it and you're like, oh, yes, the reason that I'm picking a variable or fixed kind of makes sense, right? So really, those are the two things, aside from rates, would be those two things I would say.
And I get this question a lot from people who are just asking me about the market. They're like, well, prices are so expensive. Where are people getting the down payments from? Do you have some stats as to where down payments come from? Are you allowed to tell us us, where, like, is it from like parents? Is it from just savings? Like, what are the numbers like there?
No, I think I'm gonna say a lot of it is savings, and then a lot of it is gift as well, right?
Yeah.
Like, from parents, right? And then people actually buy, like, they actually put less than 20% down, right?
Yeah.
So they're using the mortgage insurance to actually buy their first house, right? Which is what we did when we first bought our house too, right? We didn't have like the full 20%, right?
Yeah.
So those are, I guess, the different variations that people use in order, to come out with a down payment.
Gotcha. I guess we'll kind of close off, and I didn't tell you about this next topic, so I'll put you on the spot a little bit. But this is very simple, rapid fire questions about you. Just kind of get to know who you are and your personality a little bit. So I'll start off with a quick question. I'll say, okay, if you weren't a mortgage broker, what would you be? What's your dream job aside from mortgage broker?
I would say I love interior designing. I'm going to have to say, I think I spend a lot of my time looking at homes, but also being at HomeSense. I don't know if there's HomeSense lovers out there, but I love my HomeSense trips, right? I'm always there. I will find an excuse, to throw in that trip any time, of the day, right? So yeah, I think like interior designing.
So you should be a mortgage broker / stager, I guess.
Yeah.
Okay, awesome. And what's the best piece of advice someone has given you?
Housing related, I'm going to say, I think work on your credit, right? Like credit is very important. A lot of people don't realize this, right?
Yeah.
But paying that credit card bill, having those automatic, payments and stuff like that set up will set you up for success when you're actually looking to purchase a house, right? Second is save.
Yeah.
I can't say this enough, right? Especially with the house prices the way they are, start saving young. I look at myself when I used to work at McDonald's. I worked at McDonald's for a very long time. And, that first paycheck I would be like, yes, I'm going out, I'm going to go out, eat, shopping, like do all that. And now that I think back to it, and I'm like, I wish I would have saved that money and bought younger, right, when prices were cheaper and lower. I think those are the two things that I'm gonna have to say. 1A, like, don't take your credit lightly because it will help you in the future. We don't think about it. And the second is save.
Yeah. Hence why I tell my brothers and sister. Yeah. Like, because I missed out on an opportunity when I was younger. So now they're in their 20s. I'm like, don't make the same mistakes I made, right? Get into the market sooner. And they're on their way, like they're doing well. Yeah. So that's really good. Okay, next question. What is your favorite movie?
Oh dear. Legally Blonde? I don't know. It's a good movie.
I liked it. I loved it.
Teaches you some good, life skills, I would say.
For sure. Awesome. Okay, and who's your favorite realtor?
Ahsan, of course. No questions asked. Is that even a question?
Amazing. Well, thank you so much, Fatima. I hope you enjoyed your time. This was great for me, our first time doing this.
Yes.
And we'll definitely have you back on the show.
That's amazing.
And if you have any questions, comments, or feedback, please let us know. Happy to hear from you guys. And thank you for tuning in, and thank you.
No, thank you very much.
Thank you guys. Have a wonderful day.
All right. Bye.